He's down to the minute, right on time.
Good morning, Robert. How am I sounding?
Good morning, Matt. You sound
Wonderful.
great. How you
I'm
doing?
doing all right. Appreciate you organizing this.
My pleasure. It's an interesting time to have this conversation, just given even just the last couple of days, some of the things that we've seen in the market. Um, I think we'll just start just talking about the state of the sector. I think that's kind of where I want to start, and then we can just kind of get more granular, more micro from there. So just the macro state of the mining sector, so the broader mining sector, and then the junior mining sector more specifically. I was reading your July shareholder letter, your update. By the way, great first half of the year, up 16.3%. I think that was a fantastic
Thank you.
performance. I'm guessing the last 3 months maybe have not been quite as good, but that's okay. We don't need to talk about that.
No, we can, and you're accurate in that assumption. We're doing very
Okay.
well through the end of July, actually, and we're virtually even with the S&P through that period. But the past 3.5 months, I've spent underneath my desk in the fetal position, as many of this in this space have. It's been incredibly
Yeah.
rough period here. Indiscriminate tax
A
loss
few
selling
bright
across the board.
spots.
Yeah,
Yeah, a few isolated bright spots, but overall it's been pretty bleak.
that's right. Few discovery plays have worked, and as well as uranium and lithium focused names to some degree. But I think it's fair to say that everything else is bombed out, and sentiment is about as bleak as it gets in the current environment.
In your letter over the summer, you wrote that this is an excellent time to be invested in the resource space more broadly and junior mining equities more specifically. You showed some graphics about how juniors, the junior gold miners, are really undervalued, relative to the seniors. I think that gap has only widened in the last 3 months, and the disconnect between the gold miners, even the seniors, and the gold price is pretty large. What do you make of this?
That's right, and I still believe that firmly. Again, to remind listeners, investors in the MJG partnership are locked up for a full 10 years from their initial investment. So I truly do take a long-term, outlook and investment horizon in this space. Anytime that you've seen the drawdown that we have, particularly over the past 90 days or so, it acts as a gut check, and you always should be re-examining your assumptions. And the thought has crossed my mind: are we still in a secular commodity bull market here, or are we at the beginning stages of a 2011 to 2015 type period? And I think it's for intellectual honesty purposes, it's worth examining one's assumptions. But I still feel firmly this is a phenomenal place to be for this decade, as ugly as it's been in recent months. We just haven't seen the type of behavior that you'd expect to see at the top of a bull market. So for instance, metal prices are kind of a big indicator that we're still in the midst of a bull run. I mean, heck, gold, the bellwether of the commodity space, I still believe it is, just 6% off of its all-time high. You'll remember back in 2014, 2015 period where juniors were in the dumps. The gold price was as well, flirting with $1,000 an ounce. That is certainly not the case here. We have iron ore well above $100 a ton. That is certainly not bear market pricing. Copper hanging out comfortably in the mid $3 range. You'll remember in the COVID crash of early 2020, copper broke below $2 at least intraday. So metal prices remain very strong. Of course, it is possible that metal prices reverse and come down to the levels of juniors and seniors. I'm open to that possibility, but that's just not what we're seeing in the current market environment. So one reason to believe we're still in a broader bull market is metal pricing. Second, and this is a big one, is we haven't seen a CapEx boom, which has marked the peaks of previous metal cycles. Nowhere near the amount of money has been spent in this current cycle like we saw in the years 2011, 2012, 2013. So just not indicative of the top of a cycle by any means, especially if you look at these numbers inflation adjusted. So my assumption is that before this current cycle is over, we will see annual CapEx spend well above the figures that we've seen in previous metal bull runs, and we're nowhere close to that. So that's another indicator that we're still in the midst of a bull cycle, as painful and as unbelievable as that may feel to those that own juniors currently. Another thing I'm looking at, and you mentioned this in your question, is the relative valuation of commodity producers, relative to other asset classes. I mean, you'll remember in the last bull cycle, if you looked at the S&P and you included, oil and nat gas producers, we're getting upwards to 30% of the weighted S&P index exposed to nat resources. Now we're in the mid single digits, so we're far off of the type of relative valuation disparities that you'd expect to see towards the top of a cycle. And then finally, there's the green energy transition, and I am a believer in this. I do think this is a long-term tailwind for the space. I think it's more than just a narrative. Just look at the billions, tens of billions of dollars that have been deployed by governments in the Western world just over the past 3 years here. That's a trend that's going to continue, and it's effective on the demand side, and also will be helpful to finance some of these critical mineral projects going forward. So still sticking to my guns here, and think that this is not the beginning of a 2011 to 2015 like scenario.
That's really, thank you for your thought process there. I think that's very interesting, because we do have to take the counter argument from time to time, and we have to look at what could we be missing. Like, could we be in 2012, 2013 and about to go into the circling the drain mode for 2 years, right? And I think that you really laid it out well, that this is not that, or it's not likely to be that. Of course, we have to admit that anything is possible in this crazy world, but probability wise, I think the probabilities lie somewhere else.
And Robert, I should say I did envision pain in the junior space this year, and that's why we didn't add a single new position, believe it or not, between late January 2023 and early October. We were, of course, averaging into some names, trimming positions, selling a couple. So I remained active, but we did not add a single new position up until October. So that was the longest we'd gone by a long stretch without initiating the position. Took quite a bit of discipline. And also that's why in our previous calls, I was harping on, maintaining a cash position. And ours was kind of in the low double digits. Obviously, I wish it was closer to 25 or 30%, given how things have transpired. But what was keeping some dry powder to the side. With that said, what I didn't envision was this amount of pain in the junior markets with the broader financial markets not cracking. So, I mean, there's definitely blood in the streets in the junior space. And my assumption, and it was incorrect, was that we would potentially see blood in the streets, but it would be coupled with a broader financial market panic. And that has simply not occurred. So I got to this interesting decision point, just in the past, month and a half, where we had dry powder. Sentiment was bleak, certainly blood in the streets, good time to deploy capital. But we hadn't seen the broader market roll over. And so the decision was whether to utilize this dry powder and initiate a few new positions, or wait for the broader market. And we'll see. I mean, I've learned over the years in these scenarios to plug my nose and buy, even if it doesn't feel comfortable. in this case, time will tell whether or not this was the right decision, or whether I jumped the gun and should have waited until the next period of panic in the broader financial markets, before deploying, the dry powder that we had. But at the moment, we're now kind of in the low single digits. So getting closer to fully deploy, that was not the case in July.
Yeah, I recall we were texting back and forth at the very end of 2022. I think the final couple weeks, we were pretty actively talking to each other. And I joked with you, are you feeling like, you're an oversexed man in a brothel yet? And you laughed and you said, I'm getting closer, but not quite there yet. So let me ask you the same question now. Are you worn out with all the sex that you've been having, as a joke, with all the stocks, that you've been adding, to the portfolio?
Yes, I'm officially oversexed. Maybe a little uncomfortably oversexed, because again, we haven't seen that broader market crack yet. So that would, if that was coupled with the weakness we're seeing in the junior space, that would give me much more conviction. But again, it's sentiment is so bleak. Price action on these names has been so ugly, and still remain firmly convinced that the broader market dynamics are in place for an excellent decade for those of us that can survive this drawdown, that I've entered oversexed status.
Good to hear. It's interesting because the broader market has confused the heck out of a lot of people. I think I am one of those for sure. Especially this massive rip that we've seen the last couple of weeks. That's not to say I was trying to short it or anything, but I definitely didn't profit from it very well. And I think it surprised a lot of people. I guess it surprised you too. What would you say you didn't get right about the broader stock market and how well it's done, this year?
I think it's pretty simple. It's the effect of uh, significantly higher interest rates. I mean, we've seen the Fed go farther and faster than at any point in its history, and at least here in the United States, it's yet to harm the consumer. I think that's going to change, and it's obviously, as Powell consistently says, long and variable lag periods from when interest rates are hiked. But I thought by this point, with the hikes beginning in spring of 22, that we would be seeing much more mayhem, both amongst consumers and over leveraged businesses that are out there, and that has failed to pass. Again, I want to reiterate, I think it's important to have a broader market view, but my focus, and I think for those of us in the junior space, our focus should always be on selecting individual securities that provide outsized risk reward on the price on offer, and backing quality management teams. There's so much risk inherent in the space to begin with. You might as well back people that are going to do right by shareholders and have the prerequisite experience to do so. So I don't want you to get the impression that I'm spending all day gazing into my crystal ball and trying to forecast macroeconomic fluctuations. But again, I have been surprised by the resilience across broader equity markets.
Yeah, it's been pretty amazing, and suddenly there's some calls, people thinking that we're going to go to 4,800 on the S&P by the end of the year. It's pretty amazing how strong this market has been, and obviously that is a conversation for another day and maybe with a different person. But as far as the junior mining sector goes, so gold is 1966 here this morning. And usually gold is the good sentiment tell for the sector. When gold is doing poorly, the juniors do very poorly. When gold is rising, the juniors usually do well. That has not really been the case in 2023. What do you think is the cause for that? I mean, if you could put your finger on one or two factors, what has been weighing down the junior mining sector?
Well, we'll start with the seniors. I mean, cost escalation is certainly a part of it. I mean, if you look to where costs were, say back 6 or 7 years ago, we're up close to 50% over that period. That said, the gold price is up even more than that over the same period. So that doesn't quite explain it. Um, if you look at the precious metal producers in particular, they're still shaking off the horrendous reputation that they earned at the peak of the last cycle. Over leveraging, buying marginal assets, being profligate on the G&A front, and they've clearly still not earned back the trust of the broader market. On the junior front, as evidenced by volumes on the TSX-V, retail interest in the space is at a low as we speak. The contrarian in me likes that, but of course, in the immediate term, that means it's very rough on the juniors to access capital, and of course, with interest rate rises in general, the cost of capital has gone up commensurately. I was expecting probably a little bit more support from senior mining companies coming down, partnering with juniors, making strategic investments. We're still seeing some of that, but if the seniors want to ensure that there's a pipeline of development stage projects that could make it into production this decade or even early next, they really need to step up to the plate in a much bigger way. And I think that happens. It just hasn't happened yet. So the junior space is in this this kind of liminal zone with very little retail support, and the seniors still focus primarily on keeping their own houses in order and not focused on discovery.
Yeah, I think you put it well. And I would add a couple other factors to just toss in there. I think in Canada, the naked short selling has definitely been a factor in the junior mining sector, especially when they're already in downtrends and a lot of companies are low on cash. So the predatory short selling types
Mm-hmm.
take advantage of the situation. I think Canada is really the Canadian capital markets are really under fire right now, and I think there has to be some things done to sort of save the junior mining sector in Canada, and I think it will be done. I don't think that this is like all doom and gloom. I think that we will see things turn around and Canada will thrive again. But it's definitely been a very rough year for investors in the junior mining sector in Canada. And then one final point I'll throw out there is I think just investors don't want to own companies that don't have cash flow and no visibility to cash flow. And that is literally the nature of the junior mining sector. So even the tech darlings that might have 60 or 70 PE ratios, well, at least they have some cash flow, they have some profitability, and they have growth, right? The junior mining sector, you're just betting on some terminal value 8 to 10 to 12 years out in the future, and 5.5% Fed funds just kind of kills the fun of that terminal value when you can just put it in T-bills. So
That's right. That's right. But
I
that can
see.
change, of course. I mean, we've
Right.
gone through a 15 to 20 year venture capital cycle. Of course, in a different
Mm-hmm.
industry where investors have been more than happy to back companies with zero visibility to cash flow. And of course, the crypto boom more recently. Maybe there are a couple cryptos out there that generate some form of cash flow, but those are purely speculative vehicles. So the animal spirits will return at some point in our sector. And, there are investors out there that are comfortable in certain environments, putting money to work without any cash flow visibility. I do agree, though, in this current market environment, that is out of favor. I do think that changes this decade. And I did want to touch on, I have been doing a little bit of thinking here. I think you make a good point on Canadian capital markets, particularly the juxtaposition relative to, say, the ASX and Aussie listed names. And so I'm still, fleshing out my thoughts. I do agree on the naked short front. I don't want folks to believe I'm wearing a tinfoil hat here. But this practice is presumably illegal in both countries. But the Aussies are much more aggressive in banning trading, or much more aggressive in closing loopholes, and in cases where folks are found to be engaged in naked short selling, to hand down repercussions. And in fact, just earlier this year, an Australian fund manager was banned from trading for 3 years for the practice of naked short selling by the Australian Securities and Investment Commission. So there's actually some enforcement there, some teeth. And I'm hard pressed to remember the last time that we saw anything similar in Canada. A couple other differences between the two markets. One is the culture of warrants in the Canadian markets. As you know, it's much less common of a practice in Australia. And I think having less warrants associated with financings engenders a longer term orientation for many of the Aussie shareholders. Whereas in Canada, if you participate in a financing, many folks are just owning that stock for 4 months, clipping the warrants, and then moving on to the next one. So I think that's a key difference between the two markets. Another one that comes to mind is in Australia, there's much less deal friction. As you know, in Canada, a financing can take 4 weeks. Sometimes in brutal scenarios, up to 4 months to close. In Australia, it's a lot closer to 4 days. So there's much quicker, much more efficient capital markets on the Aussie front. And then, of course, going back to naked shorting, I think the combination of the 4-month hold, the often attachment of warrants, and naked shorting is a pretty potent combination that's ripe for exploitation. So I'm open to other ideas. I don't think there's a single explanation for the disparity between the two markets, but these are at least some factors that come to mind for me on why we're seeing this stark outperformance amongst the Aussie names, and the Canadian junior market in particular really suffering.
No, I think you nailed. Yeah, I think you hit the nail on the head there. I agree with all points, and that is a good point. That when they're caught with the naked short selling, there's more teeth in the punishment. And in Canada, it's more like, oh, just give us a $5,000 check and just don't do it again, right? Yeah, so that's a big difference, because if you're making $1 million or $5 million through this practice of naked short selling, and you pay a $5,000 fine, that's not a punishment, right? I mean, that's just go ahead and do it again.
That's right. Far from deterrence.
Yeah. So let's try to look to a brighter day ahead. So what could improve the sector? What could cause the sector to lift here, let's say in the next 6 months? The first thing I'll throw out is the obvious one: Fed rate cut. What else do you see out there that could turn this around?
Well, I think metal prices are important. To really get the animal spirits flowing again, we'll probably need to see gold break to all-time highs in the US dollar terms. And I think that's well within the realm of possibilities. With that said, I would caution, at least when I go about investing, we try to target opportunities that can make money, should all go to plan, even assuming a flat gold price for the foreseeable future. So companies with company specific catalysts that can create value absent a rise in metal prices. But I think if you're looking for a broad-based rally amongst the juniors, and again, gold breaking all-time highs could be catalyzed by the rate cut. But that comes immediately to mind. I actually do see a bounce into the new year. As you well know, it's common, particularly after incredibly painful tax loss selling periods like we've seen in recent months for juniors to rally into year end, and oftentimes through PDAC before the PDAC curse kicks in. So I wouldn't be surprised at all to see that again. You're also well aware, Robert, about gold's historical outperformance in the month of December. So I think it's likely that repeats again. So I do think in the immediate term, absent a complete broader financial market meltdown, that there will be a little bit of relief to investors. But again, I think metal prices will probably drive that next broader base bull market higher. It could be a major discovery. Bre-X before its downfall, helped catalyze the junior space in the late 90s. I don't know if there's anything quite on our radar yet that would fall into that category where a single discovery catalyzes the entire place, but the entire space. But I'll leave my mind open to that possibility as well.
Big .V, Matt. Big.
I've been following
Hercules
closely.
Silver.
I've been following
Hercules
closely.
Silver.
Basically, the one name that has made investors good money in the past 6 weeks, not focused on lithium and uranium. I find that story very exciting. And I know,
With the
you
best
were
stock symbol on the TSX-V and a new discovery that fits the bill. It's going to save the day for all of us.
on a single drill hole. They should just
Oh, don't
pack
spoil
up.
the fun. Barrick just took 15% stake, okay? And they saw the drill core. So we're going to have more good news to come. I'm talking my book. Obviously, I'm long. This is not investment advice. I don't want to get anybody too horny or hyped up. I have no idea what the results are going to be. I'm just making a joke.
Mm-hmm.
But, obviously a Fed rate cut coming in the first half of 2024 could be a big catalyst, turning into a rate cutting cycle. I think we're a lot closer to that with the data we've seen this week. I mean, the PPI prints negative 0.5%. The CPI comes in flat on the headline. Yep. I mean, the Fed has beaten inflation based upon the data. Now, obviously, I'm not thinking they're going to cut anytime like in the next 2 or 3 months, but it's possible that they could cut in March or May. And obviously they will telegraph that to the market. So I'm actually pretty bullish on the juniors here. I hate to say this because I feel like I jinx it, but I am. I'm just being honest. I'm really bullish here. And I'm long the GDX here as well. I'm very bullish on that for a trade here into year end. I feel like we're going to start to see the tide turn. Can you talk me down off the ledge here, Matt?
Well, we're deploying money, as we speak. As I mentioned, we've done 3, or I don't know if I mentioned this, but we've done 3 different financings in the past 5 weeks. So I'm putting my money where my mouth is. But I think your contrarian instincts are right. Again, there is of course the possibility that the broader market unravels, and were that to start tomorrow, we could see sharp 30 or 40% downside from current levels into kind of a capitulatory bottom. I'd like to think that won't be the case, but I think it's hard pressed to see juniors rallying or holding their ground. If we see another early 2020 like sell off, or even the sell off that we saw in spring of 2022 when the Fed started its current rate hike cycle. So that would be my one point of caution. I think if the broader markets hang in there, then your optimism and confidence is very well placed. But I wouldn't rule out the possibility of more pain driven by a breakdown in the broader markets.
Fair enough.
Have you been talked down?
Well, I've been around long enough and had my head bashed in more than enough times to, as soon as I feel too confident or too optimistic about anything, I start to think, oh shit, I'm about to screw up again, right? So don't worry, I'll be okay. But
But
you know,
there
like
are blood in
another,
the streets. You're right. There's absolutely blood in the streets.
there is blood in the streets,
I haven't
especially
seen
in the
this
junior.
the sector this despondent really since 2014 or 20
I mean,
2015.
we've got conferences being canceled, companies cutting their drill programs short. Some companies have completely cut their marketing budgets, right? So this is blood in the streets, man.
Right. Right. Could get
Um,
could get worse, but
it could get
it's
worse. It could always get worse.
yeah,
It could
yeah. Got to
always
keep
get-
that in mind, and investors need to steel their nerves for that possibility.
Yeah,
Um,
like as soon as I say I'm bullish here and I'm optimistic, I do want to, acknowledge it could get worse and I could be totally wrong.
right. We also have another 2 or 3 weeks of tax loss selling likely. Um, I always think it's going to end a little bit early. As all weak hands have already thrown in the towel, but just in the past 2 weeks, first half of November, it's been as ugly as it's been. Um, with the number, few names in our portfolio down to 52-week lows. So we maybe quite haven't seen the end of tax loss season, but we're drawing close. We're drawing close. But I would like to touch on Hercules if you're willing.
Yeah, yeah,
I mean,
let's do it. It's my favorite topic.
it's it's really exciting. I mean, you probably saw 52-week highs this morning with Hercules just under a 300 million Canadian market cap. So that is wild, and just it's good for the space. A testament to the power of a new discovery, no doubt. And the thing that was cool about this was that it truly did come out of left field. Like, just look at the name of the company. This was a tried and true silver focused junior who had a chargeability anomaly at depth and decided to extend one of their drill holes beneath the near surface silver zone and appeared to have hit pay dirt. Of course, this is a single drill hole, but it's clearly promising, and the Barrick validation definitely speaks to the geological potential here. Um, the other thing I like about it is I do think it has the potential to flip, conventional geological wisdom on its head as it comes to Idaho. I mean, for decades here, Idaho has been completely written off as a potential porphyry destination. You'd be hard pressed to find any credible geo that would tell you to go to Idaho to look for porphyries. That may be in the process of changing here between this discovery, the Barrick endorsement with the strategic investment. We may see something that resembles a staking rush. I mean, certainly that's been ongoing in the immediate district around the Hercules project, but potentially elsewhere in the state as well. So I think that's just in the early stages. Kind of the starting gun went off on the day that Hercules announced this discovery. I think it's been about five weeks now from that discovery hole announcement.
Matt,
Um,
is it okay if I interrupt you for just a second?
yes,
Can you hold that thought?
I can hold it.
Um, there is a staking rush going on, and a little piece of data about the state of Idaho is that you have to physically stake it. It's the old west. You actually have to go out and do
Love
the
it.
actual physical staking.
Love it.
And in Idaho, the state law is if you jump claims, you can be shot, and it's totally legal. So there are guys out there staking in this area with shotguns and handguns on their waist. This is a serious staking rush going on, and it's in full swing.
Hmm. That's right. And
So go ahead.
well, just before the Hercules discovery, there was only one other player in that immediate district, and now I'm sure that there are multiple names, potentially Barrick doing some staking of their own. But I know for a fact this has attracted the interest of the largest companies beyond just Barrick. Think the world's largest copper producers, and they're having a very close look at what's going on here. So again, early days, jury is still out, but folks are rethinking this long-held wisdom that Idaho was not of interest from a copper perspective. Um, just shifting to the Barrick investment quickly, you'll know, Robert, that they put $24 million into Hercules last Monday at $1.10 per share, and then just a few days after that, followed on by purchasing 7 million warrants from an existing shareholder for about 6.5 million. So that's brought the Barrick, total capital outlay to this point to 30 million, with a stake in Hercules, 15% in terms of issued shares, 17.5 on a partially diluted basis. As mentioned, I think this, while early, this is a ringing endorsement of the geological potential. Hercules has made it clear that Barrick has seen core that the market hasn't, and has a sense of kind of what's to come, at least with these follow-on drill holes. And it also provides the capital for Hercules to aggressively push this project forward for at least the next 12 months. So that's a positive. Worth noting, here's Mark Bristow putting his money where his mouth is when it comes to his love affair with porphyries. I find it interesting that this one, at least as of yet, does not have a gold kicker in addition to the copper. The potential byproducts here are silver and molybdenum, but it shows that Bristow does not need to see gold in the system in order to get excited about a copper porphyry. And one other thing I'll add, just to temper expectations a little bit, I do think the Barrick strategic investment's a great outcome for the company, especially for those shareholders that owned Hercules pre-discovery, or those astute, discovery hole speculators that piled in the immediate aftermath of the discovery hole being announced. But the Barrick investment does have some strings attached. They do have information rights, as mentioned, so they're very close to the action. They have anti-dilution protection, but most importantly, they have a ROFR over the project. So I've had some very smart folks in my network say that Hercules is basically given the keys here to Barrick. Where I've had other smart folks in my network note that, yes, the ROFR is not ideal, but look at Turquoise Hill at Oyu Tolgoi, who had similar terms, and that didn't stop them from 10xing on the back of their discovery, over a few year period. So while there are strings attached, this of course hasn't stopped Hercules from rising close to 30% above the Barrick deal price. So far the market's been very receptive to the deal and the Barrick endorsement, irrespective of the ROFR.
Yeah, you make some fantastic points, and I would add that Barrick was buying the stock on the open market in late October, and that's not so. I did a space with the CEO, right? Back, it was like October, I want to say 19th or 20th.
So they started. That. You were on it. You were on it early.
Yeah, I was on it. Yeah, I was on it the morning of the announcement. Mm-hmm. But they started buying a few days after that space, and on the space, he said, we're not financing right now. We've got the goods. We don't need money, and you're going to have to buy in the market. He literally said that on the Twitter space, and they did. They were buying it they bought over 5 million shares, right? And then obviously, confidentiality agreement, blah blah blah, and they did the deal. And you're right, Barrick is definitely in the lead here. There's no question about that. And while we could say they've seen the core, the way the stock is trading is obviously very strong and telling us that there's likely to be some good news coming. But let's just play devil's advocate. Like, what could go wrong here? Obviously, as you mentioned, almost 300 million market cap at a very early stage. Okay, that's
what
number.
Could go wrong. Yeah, you hit the nail on the head. That's a hefty market cap for a single drill hole. The bar has been set very high here.
Yeah, that's a very big number. There's no doubt about that. And Barrick, if I put myself in Mark's shoes as the CEO of Barrick, what is it? It's 25, 30 billion market cap company. So a $30 million investment for them is not a lot of money. And it's worth it almost to just make sure that if this is something really special, that they got it first, right? That they don't get left on the sidelines if this is really something special, right? And if it doesn't pan out to be something that great, it's not an enormous loss for them. So I sort of see it as a shrewd move on his part. Now, obviously, they're not in the business of making bad investments and throwing away, millions of dollars. So obviously, they like what they see here, right?
But yeah, clearly. No, I think you hit the nail on the head there. I don't have much else to add, honestly. On terms of what could go wrong. I mean, plenty could go wrong. But look, I mean, one aspect I do like is Hercules is well cashed up for the next 12 months now at a minimum. So at least there's minimal financing risk. I should add we don't have any exposure to Hercules. We do potentially have a indirect way to play the discovery, but I should save that for another call.
Yeah, we'll save that for another call. That'll definitely be a good call. So yeah, and this could be a new copper porphyry belt in the U.S. So this has potentially very large, implications for the sector, because if this is really something special and new, which we got a staking rush underway, and there will be new companies spun out and formed out of this, right?
Sure.
And that could sort of raise the spirits of the whole sector, right?
Yeah, and especially potentially for the whole sector, certainly in Idaho, which has really been a beaten down mineral jurisdiction for decades now. Very
It's
rich
only been
mineral history, but you got
yeah,
to
but
watch out for those fly fishers. They're a powerful lobby. So if you have fly fishermen, out in the streams anywhere remotely close to your project, good luck. So that's a
oh boy.
very
Okay,
nice
so you just
little
threw
rule of
a
thumb.
red flag out there. I don't think there's any fly fishing at the Hercules project, but definitely got to double
There
check
isn't, to
that.
my understanding.
Okay, we
But
got to double check that.
there are nearby to other interesting assets within the state that could be a death knell.
And
That said, given its,
copper
go ahead.
is copper is a strategic metal now, into the US, right? So while some people might say, well, permitting in Idaho is not a slam dunk. Well, yeah, it's never a slam dunk, but the US needs more copper, right? And so if this is something of scale, I'm pretty sure that they will push it through.
Yeah, we'll see. I mean, I think it's still very early days. It can take years for potential roadblocks to come out of the woodwork. But I think permittability is not, going to drive the Hercules share price, at least in the immediate term. I mean, the discovery is so fresh. Market will be more focused on tonnage and grade. Those are
Absolutely.
the two key variables here.
Absolutely. So
And grade looks nice, and close to 200-meter width is a great start. But they're going to have to prove that there's enough bulk here to take make the Herculean effort to actually turn this into a mine. And this certainly won't be a mine, this decade. It's just too early stage. But it doesn't mean that Hercules shareholders or Barrick, can't be rewarded, from current levels.
Okay. Yeah, I think we've had the big chat, and obviously there is a lot of speculation. There's a lot of unknown, so don't want to get too far flung in this conversation. I'm a shareholder of Big. I've been a shareholder since October 10th. Let's talk about the sector and consolidation in the sector. We've seen some news this week with Caliber buying, Marathon, or doing a consolidation of sorts with Marathon, and then big deal there with Teck's coal assets. I think that this consolidation push in the space is also a positive factor.
That's right. Yeah, we've gone quiet a little bit here. there was a spate of deals kind of in Q1 or Q2 of this year, but I think folks have largely been hunkered down in recent months, kind of assessing different options. Yeah, the Caliber, Marathon tie-up is interesting. I don't have confirmation of this, but to me, it smells like a deal that was hatched at Beaver Creek. Usually it takes at least a few months, let's say at least 2 months, for the early talks that begin a deal to actually progress to this stage. Opportunistic by Caliber for sure. They've done a very impressive job, turning lemons to lemonade, so to speak. For what was a few years ago just a company solely focused on Nicaragua. In hindsight, they've made some smart moves, diversifying outside of the country. Of course, first with their acquisition of Tim Warman's Fury Gold and the Pan Mine in Nevada, and now here's their second foray to a more hospitable jurisdiction with Marathon. I believe the NAV, assuming this deal does go through, will now be a majority U.S. Canadian focused, 60% give or take, with 40% of the company's value still tied to Nicaragua. They are, of course, assuming risk on a mine build, but again, de-risking on the jurisdictional front. There's a chance of a competing offer. I wouldn't put it particularly high in this case, but maybe 20-25% chance that another party steps in here. I think it would help if we saw a large move in the gold price in short order. That would probably increase those odds. But I wouldn't bank on a competing offer, but it's not entirely outside the realm of possibility. And a decent premium. We're seem to have passed the period of no premium mergers. The premium here, when adjusting for the placement that Caliber has subscribed for in conjunctions, around 26%. So that's not terrible. And an interesting read through for other late stage developers, or even companies that are in the midst of a mine build. Particularly within North America, you would have seen that Artemis Gold and their Blackwater project, which is under construction, they were up 5 or 6% on the day of the Marathon announcement. Potentially a positive read through for groups like Skeena. Talisker Resources is also taking forward their Pioneer mine, into small scale production. That is a company that we have some exposure to very recently. They're not in North
What's your
America.
exposure to Talisker?
Oh, we participated in the most recent financing. Just for full transparency.
That was attractive enough with a full warrant, huh?
It was a half warrant. But yeah, fortunately we'd held off. I really respect Terry. He's a top-notch geo. Had avoided the stock for a couple years there, and I mean, geez, a lot of pain. They had fallen close to 85% from their peak in early 2021 to where we entered the financing. The valuation was 25 million Canadian. They'd already spent 50 million, and that's just Talisker over the previous few years. Ignoring all the historic expenditures from previous operators at that asset. And also they have this interesting royalty deal with Sprott, streaming and royalty, where they can draw down a royalty in tranches if they so choose. So my understanding is Talisker does not plan to draw down any more tranches of the royalty, but were they to do so, that would bring a combined 55 million into the company, relative to a pretty cheap market cap. So we'll see. Yeah, that's a bet on the team executing on its endeavors. There's certainly risk there, but it got to the point where I like the risk reward, and I know for a fact, due to interaction with some of the Talisker shareholders, that was a prime tax loss candidate that had seen a lot of selling for non-fundamental reasons. So decided to strike. So we'll see how that one works out. Osino is another name that comes to mind. I know it's not in North America, but they're getting to the kind of decision point at their Twin Hills project in Namibia, on whether to go ahead with the build or hand it off to a larger party to take that asset forward. So I don't want to draw any major conclusions, but it definitely, especially as evidenced by the share price reaction in Artemis on the back of the marathon news, has whetted the appetite of the market for these very late stage developers, or even companies that are currently building a new mine.
I do want to open up the floor if anybody has a question for Matt. I'm going to have to hop in about 12 or so minutes. But yeah, let's definitely open up the floor. If somebody has a question, just please hit your speaker button and I'll call on you. That is interesting. I do want to ask you about one of your portfolio holdings. It's a company we've talked about previously, and I'm just curious because, like much of the sector, it's been beaten down. This is Starr Royalties. When you first sort of pitched it to me, I was like, wow, this is a really good company. Like, this is something that I would like to be a shareholder of longer term. And I've just sort of watched it because I had a couple of questions about a couple of their royalty assets, and I was proven right to sort of have some questions about them. But now I'm just wondering, at 25, 26 cents, about a 19 million, 20 million market cap in Canada, it's looking pretty tantalizing. Are you still a holder of Starr? Are you still have confidence in the company? What are your thoughts here?
Yeah, we're long and strong Starr, and have averaged down. For full transparency, our average cost is around 44 cents. So we're a good amount underwater, but it just makes too much sense from a fundamental perspective at these levels. For what it's worth, they're on the very last day of October, there seemed to be some capitulatory type behavior in Starr. We saw some very, very heavy volume. Company trade down to 22 cents and then reverse up to 30 cents. So there's obviously no guarantees in this business, but I think it's possible that the bottom has already been reached there. And we were adding shares shortly before that in the high 20 cents range. Look, I mean, Star's at an 18 million Canadian market cap currently. You can look at the company one of two ways. They have multiple cash flowing mineral royalties that the company acquired for 34 million Canadian in total. So that's the book value. So one way to look at it is you're paying 50 cents on the dollar for their mineral royalties. So even under the assumption that they overpaid by 2x for those royalties, you're getting those at fair value. And then in addition to that, you get their Green Star business for free. They own 62% of a subsidiary called Green Star. Agnico Eagle put in the check for Green Star's most recent financing. It's now been a while. That was in spring of 22. Obviously, quite a bit has changed on the green front, especially on the carbon credit front. It's been a very ugly market out there. But upon their investment, Agnico Eagle valued Green Star as a whole at 40 million Canadian. So that's 25 million Canadian, give or take, in attributable value for Starr. So investors can handicap that 25 million value as any which way they please. But regardless, looked at through this lens, you're getting the green business entirely for free. And then looked at through the other lens. Let's assume Agnico Eagle knew what they were doing, and Green Star was and is worth 40 million Canadian as a whole. You're able to get Starr's carbon credit business at a 25% discount to what Agnico thought it was worth in the last financing, and then you get their mineral royalties for free. So I like the story there. It's a bit cumbersome. I don't think these two, the mineral royalties and Green Star, belong in the same vehicle. But that, of course, can change and probably will change. And that's a potential catalyst for the share price whenever that does come to pass. So, still like Green Star, Still like Starr Royalties quite a bit.
Chris Holdsworth, I'm activating your speaker link. Just try to make it as brief as possible. If you have a question for Matt, go ahead and ask. All right, I'm also activating Alan Berry. If you have a question for Matt, go ahead and ask it. Alan or Chris?
Can you hear me?
Looks like Alan is on mute.
I'm.
Yeah, you're coming through now.
Hey guys, I just wanted to thank you for putting out content like this. I think that more of this stuff is needed in the junior space, and I think that we need to get some good commentary out there. There's certainly not enough of it, and I just wanted to say thanks a lot for the content, and I enjoyed listening in.
Thank
Appreciate
you,
it,
Alan. And thanks for all the content that you put out. You've had some good videos that I've watched in recent months. So thank you, Alan.
Yeah, I appreciate it. We need more of this, guys. Thanks a lot.
Sounds good. Well, I think that's a good place to wrap up, Matt. Unless you have anything you'd really like to finish off with, I think we hit on a lot of key areas. Starr definitely on my radar here in tax loss season. I don't own it now, but definitely on my radar. And even Talisker, going to take a second look at that one too.
Yeah, I'd be interested in your thoughts on both when you have a chance to have a look. I know you're more TA inclined than I am. So thoughts on whether we've seen the bottom in Starr here, and similar question with Talisker. So we can discuss. But no, I agree. We covered a lot of ground. Thanks for setting this up, Robert. And as you know, I'll be putting out the latest MJG investor letter in mid-January. Realistically, I always try to get it out early January, and then it bleeds a week or two longer than I would like. But that will have our performance through year end 2023. And it would be good to arrange a call after that if we haven't spoken beforehand.
That sounds great. Thanks a lot, Matt. Have a great day, and let's have a good end to the year here.
Fingers crossed.
Cheers.
All right.
Thanks, buddy.
Thanks, Robert. Cheers.